All right, what is going on, Discord family, and welcome back to another edition of Market Review with me, T. Hobbs. Today is February 13th, 2025. Happy pre-Valentine's Day to all my ladies out there. Ladies! I'm just kidding. Okay, so today is, it was a good day of trading. I'm not going to lie, right? But not for me, all right? It was a shitty day of trading for me. I ended the day green. Had a good day in regards to P&L, but I'm still not happy with my performance. I may be nitpicking, but I'm here to be the best version of me. And today, I'm going to speak on it because I took some losses today. I took some wins today. I came out green, but I did a lot of shit I didn't like. All right, so I'm going to talk about that as in addition to going over the pre-market plan, letting you know kind of how price played out today, as we usually do for the YM, NASDAQ, and the S&P 500. Today was a different type of day because I actually traded the NASDAQ and I traded the Dow Jones today. So I'll get into why I did that, some things that I was seeing, and why I'm able to do that and also still follow my plan. All right. Current conditions, the market was range bound. We were bearish as long as we stayed below 245, 233. Been saying that all week. This high up here is still intact, so we're still bearish the closer we get to these levels. As we pull into these areas, obviously we're trying to rally up through all this liquidity. So it's just a really choppy behavior in the way we get up there. We're bullish as long as we stay above 43,962, which we did all week. I said we have the same plan we have had all week. The market has not chosen a direction inside the range. Inside a range, I will continue to look for longs at the extreme lows and shorts at the extreme highs. Problem was we were only at the extreme during the London session. The London session expanded, Tokyo and London, and then they left New York on the Dow Jones specifically. They left it for consolidation for 4 hours, but we'll get into that. The high was 44,571 through 45,513. The low was 45,450 through 44,400. Okay, we were looking to at the extremes be bullish. We never came back to these levels. And then at the extremes be bearish. We hit these levels, but basically at the end of the day, in which the bulls had already caught momentum. So we're still bearish up here. It just may be a trade that plays out tonight inside of Tokyo or London, right? All right, so let's come down a little bit closer to price, and I'll discuss some of the things I did not so good on the day, and then some of the things I did well on the day. So, okay, there we go. I hate like OBS like just drags my stuff out a lot. I don't know why. I might have to go back to StreamYard subscription because OBS is just not working with my MacBook. All right, so on the day, right? We started the day, right, on the Dow Jones over here at 929.30. We started the day off at the high. I took an excellent short up at the highs. I think I got short like 44,592 or something like that. I don't know. It was up there, pretty high up there, right? I took the short. I got out at settlement price, which was down here, right at these lows. New York AM and settlement and the daily fib were all right here. So I thought this was a great area to take profit, which I did. I should have just got out of the whole position, which I think anytime I go short, I'm getting out of the whole position. There's no need to hold a runner because it's not running, right? Like I could count on one finger how many times I've seen my runners run when I'm going short. So I should have just got out of the entire position. I didn't. So that was a mistake. And then because I was so bearish up here, right? It's, man, how do I put this? I was so bearish up here. And when I saw this straight down candle and it being so definitive, the only thing I saw was this aggressive candle, but I didn't look at what it accomplished, right? This consolidation back from 750 to 810 was so key. Let me turn this music. So this consolidation right here, back from 750 to 810, and then the low at 350 being placed, that's London low of day. We brought a high above that level. We consolidated, right? We got above that high. And when we came back down, this was nothing but a retrace back into structure. So I should have been looking to get long right here. Instead, I made my first mistake, right? My first mistake on the day was I don't short below midnight. Right? I just don't do it, right? Midnight price, I believe was like this white line here. So 44,541. I got out of this short on my funded account. I was done for the day. I went over to the combine that I'm trying to pass for like I don't know, last week or so. And I decided to re-enter short below midnight. Number one mistake, right? Was I at an area that would fit my plan? Sure. But the market was developing bullish character. So I decided to short here. I was in profit for a second and then they just fucking ran my stop, right? Then I was just like, you know what? I'm gonna be hands off because I really didn't like the price action. And then I went over to NQ and I took this trade, right? And I like to share these things because we're all human, right? Like if you're a person that doesn't make mistakes, then good on you. Maybe you should apply to be a cyborg, right? Because I'm human and I make mistakes. But you have to be man enough, woman enough to mean it. I mean, to understand it enough to go back in and read over it and see what you did wrong. What did I do wrong here? Well, midnight price was below this big ass yellow box. So not on the Dow Jones, I was taking longs, I was taking shorts below midnight. And then I went over to the NASDAQ and I was taking longs above midnight. Part of it was simply just impatience, right? A lot of it was impatience. A lot of it was just, feeling the FOMO to want to just get involved because I had sat on my hands for about 2 hours, right? And I did nothing for 2 hours straight. So I was just restless, right? I didn't take the shorts at the high. I didn't take the longs. I was like, fuck it, I'm gonna just take the longs off a fair value gap. I don't fucking trade fair value gaps. I was making shit up, right? I'm telling you this to tell you, like, if you're experienced this, you're human, man. Give yourself some grace. You're not gonna be right every single day. I did spin the block on the NASDAQ later. I'll talk about that trade as we continue. But anyway, if we're looking at the macros, right? Let's come down to the 1 minute because we were having this discussion as the market was playing out today. And we kept noticing, man, we keep trading up. We're just trading up inside of every macro. We're trading up. Why aren't we coming down? Why aren't we coming down? But the reality is we weren't actually trading. We were trading up into the macro, but we started trading down to make the lower wick. Remember, 950, 1010. What makes it a macro is essentially the last 20 minutes the last 10 minutes of the hour candle and the first 10 minutes of the hour candle. Well, if the candle is opening, right, it's gonna go try to make a lower wick, okay? It comes down and it slows down inside of 950. It travels above. This is the thing that we kept missing. And me personally, I missed it multiple times. What I kept missing was inside the macro, if we take the previous high, structure trumps time, okay? So even if we're inside of a 950 macro, we're trading down to go up, but then you look at this like, man, we trading up, we must be about to come down. You're right, but the question is, did we break the high? This is the high that needed to break, and we did break it. So when we trade down on the other side of 1010, we're probably just trading back into, this is what I was trying to illustrate during the day, is we're probably trading right back into 50% of the previous low, right? Sorry if this is a little choppy, but it's choppy for me too. So yeah, we're trading back into the previous low and the previous high right at 44,506. And you can see that's exactly what the market taps back into, right? That being said, every single macro today, we were breaking highs, then pulling back into 50%, and then finally putting in a lower high up here, right? And then dipping down all the way into 1 p.m. To be quite frank, this is the only trade, right? If I didn't take the longs over here, this is the only trade setup that I should have been waiting on. And I said it. And this is the part I'm proud of myself on, right? I made a couple mistakes, but I got back on the horse and I said, okay, after I took that loss on NASDAQ, I said, I'm not taking another trade until the PM session. I need to see the one of these instruments liquidate into 110, right? Into 110, and then I will take the trade, right? And I'll show you guys that actual trade that I took. Give me 1 second. Yeah, I think this is it. Hold on. Let me see if I can put it up here. Okay, yeah, all right. Yeah, I posted it in Valdez's Discord. I didn't even post it in our Discord. So this was the trade I took on the NASDAQ. I spent the block and I waited. right? I waited for the liquidation, right? You see, we got the liquidation down. We got below midday, right? We came down to 90275. I came down to the 30-second and I took a proper trade, a proper entry. I trailed my stop. My target was 22,072.75, right? Which I would have hit if it wasn't for this stupid Trump candle that knocked me out directly after I took this screenshot. It knocked me out of the trade, but I was comfortable because one thing I always tell you guys, if I'm ever up $1,000, I'm not giving that back. 10 plus 50 or 10 micros, right? On the NASDAQ times 50 points, that's $1,000. So I'm gonna lock that in, right? I'm not gonna be mad after I get knocked out. It's all good. I'm done for the day. Combine back green, everything's all good, right? But it was the same setup over here. We liquidated inside of 110. We finally came back to this 50% line right here, right? Held the 4-hour support, dropped down. This is the candle that knocked me out right here, right? We dropped down, held the PM session open right here at 596, and then we rallied right to the target right off the pre-market plan, right? The pre-market plan is sauce, but sometimes I get distracted by the whack price action, or I start making, reasons to do something that's not on my plan. And, if we're trading live and y'all hear me start talking about some shit that's not on my plan, you start hearing me draw fair value gaps and I'm looking for this area. It's like, motherfucker, was that on your plan? If that shit's not on my plan, I got no business trading it. None. I have a plan for NASDAQ and ES every day. That's why I don't mind trading them, right? So don't think just because I'm trading NASDAQ, you're not following your plans. Like, yes, I am. Like, I have a plan for all of these. I just don't write them down. This is a waste of my time, right? But ultimately, we ended up going right into 44,772 and then pushing up to our next level, which is probably going to be the weekly projection tomorrow at inside of 45,297. Let's move over to the S&P 500, in which, again, the markets were just delivered a little bit differently on all three instruments, but they all ended up doing the same thing ultimately. The Dow just took a lot longer than everybody else, right? So if we look over here to the S&P 500, you could tell, again, 350, where are we at? Low of the day. Something that I got to take note of now that I'm not trading London is, where would I be getting in during London? Well, I'd be getting in right fucking here, right inside of 350. So if that's the low of the day, what are you even doing looking for shorts, right? Like, what are you even doing looking for shorts? Unless you're at the high. My first short was beautiful. Don't get it twisted. I would not be mad at that short all day because I needed liquidation anyway. But after that short, that's the only valid short. That's it. After that, it's go time, right? Me and Jay Seals did some shit that we trying to just throw out of our resume, which is, the second we see this aggressive selling, not take the low here. First thing we want to do is short it to go take the low. It's like, no, if it was going to take the low, it would have just took the fucking low, right? You should be in the long, right? Targeting these highs up here. Jay Seals ended up taking a really great trade. I believe he took the shorts at the high up here. Got out like right on the first break of the lows, which I don't blame him at all. Like, at this point, like, it's so dangerous to be a bear, in my opinion. It's uncomfortable. The trades don't really like pan out as much as you would like them to, right? So it's almost as if right now, as the market's in expansion mode, right? Like, it's almost impossible. I shouldn't say impossible. It's very difficult to be a bear, right? Me personally, I would just like to look for good opportunities to long the market, right? But anyway, 1 p.m. session. Again, the PM session was the true sauce. New York AM session, at least for the Dow, just proved that it's just not even worth trading sometimes, right? But the PM session, again, came through like a boss, swept the lows down here, came almost back to midnight for the S&P 500, and then rallied right into our area of 61.22. I think all of the ES traders had this on their chart. 61.17 through roughly about 61.63 is the next supply zone area that we're trying to work through now. And looking at the way we finished, it wouldn't surprise me to see a gap and go inside of Tokyo tonight, right? So if you're looking to trade Tokyo, I think it's going to be a trending type of day. So just be aware of that. And then old NASDAQ, baby. NASDAQ came through and got me back on track on the day. I was very, very proud of my trade. I just want to talk about the things I did wrong, right? So obviously I caught the PM session trade. Beautiful. But number one rule for me, right? One of the biggest rules I have is I don't trade between the hours of 11 to 1. right? When I took this long, I was just I was in the market too long. I was staring at the charts too long. That's what it was. And I should never have even been in the market at all, right? From 11 to 1, if I'm here, it's a problem, right? I should not be here. The only time I should show back up is at 1 o'clock. And if I would have just showed back up at 1 o'clock, guess what? Look at this move down at 1 o'clock. This was like textbook, right? Consolidation. All of this was consolidation from 11 to 1. And I know from 11 to 1 o'clock, that's exactly when the market goes into this bullshit consolidation, because I draw a chessboard every day, right? And I started at 11 o'clock because that's where the consolidation starts. That's usually where I find my ranges, okay? I could have stayed out of the market this entire 2-hour period, right? And then just came back and be like, okay, what we doing inside of 1? We still consolidating? All right, I'm just waiting on manipulation to the downside because I want to get long. Okay, gigantic dump to the downside, higher low, long off 21,902. That's the trade. I took that trade, right? And that's the only trade I should have taken on the day, low key, right? Not on the day, but inside of that time frame, right? I really am trying to lock in on trading my time frames, and that's it. Because when I do that, I trade so well, it's crazy. So I wanted to get on here and talk about some of the flaws on the day. The good thing is I'm still managing risk, right? I'm still doing what I'm supposed to do every single day. It's that there's some days we just have these little hiccups, and I think it's good to discuss the hiccups more so than you discuss the good things you do. So that being said, my name is T Hobbs. This is the Market Review. We'll catch you on the next one, man. Peace.